This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Russian oil tankers are not targeted in the European Commission's proposal for tightening the implementation of a price cap on the country's crude oil, EU diplomats said on Wednesday. The Financial Times reported earlier on Wednesday that Denmark will be tasked with inspecting and potentially blocking Russian oil tankers sailing through its waters under new European Union plans as a way of enforcing a $60 per barrel price cap on Moscow's crude. The FT said that Denmark would target tankers carrying Russian oil that did not have Western insurance, a step that would hit Russian oil export income hard while snarling up the entire Russian oil production and refinery business.
U.S. crude oil stockpiles jumped last week, while gasoline inventories posted a surprise draw as refineries picked up runs amid seasonally strong demand, the Energy Information Administration said on Wednesday. The EIA resumed publishing weekly data after a 2-week hiatus to complete a planned systems upgrade. Crude inventories rose by 3.6 million barrels in week to November 10 to 421.9 million barrels, compared with analysts' expectations in a Reuters poll for a 1.8 million barrel rise.
Moving on to the top news in the energy sector.
India has cut the windfall tax on diesel and crude oil on Thursday, according to a government notification. The government cut the windfall tax on crude oil to 6,300 Indian rupees, $75.70, a ton from 9,800 rupees a ton, while cutting the diesel windfall tax to 1 rupee per litre from 2 rupee per litre, the notification said. India imposed a windfall tax on crude oil producers in July 2022 and extended the levy on exports of gasoline, diesel and aviation fuel as private refiners wanted to sell fuel overseas to make gains from robust refining margins instead of selling locally.
U.S. developers building renewable energy projects and power storage for grids are scrambling to procure critical components, leading to rising costs and project delays. Supply chain problems have tightened supply of high-voltage transformers necessary to connect wind and solar farms and batteries to the grid, projects that are key to the energy transition. The long lead time for delivery of the transformers, which can be the size of a large truck and need to be custom-built, has forced some project developers to order equipment before commercial agreements to sell power from the projects are in place, said Vanessa Witt, senior energy storage analyst at Wood Mackenzie. Next, we have the top news in metal markets. The European Commission has proposed a ban on imports of diamonds and liquid petroleum gas from Russia and also to tighten implementation of a price cap on Russian oil as part of new sanctions against Moscow, EU diplomats said on Wednesday. The 12th sanctions package, that the European Union's 27 member countries will discuss on Friday, also contains a ban on the transit through Russia of goods and technologies that could boost the country's industrial capabilities, plus import bans on a number of metals. Agreement on a final package is expected to take weeks as a deal will require unanimous backing of all 27 EU states.
U.S. steelmakers are on course to post higher profits in the first quarter of 2024 as prices spike from a scramble by buyers to restock following a brief halt in procurement before the strike at the Detroit 3 automakers. Spot prices for hot-rolled coil, HRC, the most actively traded form of finished steel, have climbed to around $950 per short ton, street, currently from an average $734 in September, as per commodity research firm CRU Group. Service centers, facilities that play a crucial role in supplying manufacturing companies nearly finished steel products, had paused purchases ahead of the United Auto Workers, UAW, union's coordinated strike against the Detroit automakers.
We will now look at the top news in the agricultural sector.
France Agri mayor on Wednesday raised its forecast for French soft wheat exports outside the EU in 2023-24, but also lifted its season-end stocks estimate to a 6-year high on lower forecasts for intra-EU shipments and domestic livestock feed demand. In a monthly supply and demand outlook, the Farm Office projected soft wheat exports to non-European Union destinations at 10.1 million metric tons, up from 9.8 million projected last month and now just 0.5% below last season's level. The rise was mainly due to larger estimates of French wheat sales to China and Egypt, France-Agri's analyst Clémence Lenoir said. Strong Chinese demand had already prompted France-Agri to raise its outlook for non-EU shipments last month.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.